Market, and we're discussing some unusual options activity in the market today, starting with one of the largest companies in the overall market here, which is Nvidia, looking at some of the more bullish activity we're seeing within options trading today. Tom, so walk us through what caught your attention.
Well, one of the things that caught my attention is the fact that Nvidia is only one of the only Mag 7s that's higher today. So not surprising, we're seeing call volume more than double what put volume is today. Even on a lighter trading day, we've still got about 1.5 million calls trading in Nvidia. This might be on the back of the ByteDance, TikTok's owner, stating that they're trying to purchase up to $7 billion worth of Nvidia chips outside of China. Remember, they can't buy them inside of China. The high bandwidth ones that they need for their data centers. So that's probably putting a little bit of support into the stock. And then also the upcoming January 6th CES conference where Jensen Huang is going to give the keynote address. That's going to be probably big. He's probably going to give some indication on demand for their products for the Blackwell. They're basically sold out of those chips already. And a lot of the big tech companies have stated, hey, we're going to continue to spend on AI infrastructure build out, and that helps Nvidia because they own about 85% of the data center chips, GPU chips that are out there at this point. And then on top of that, you got Rubin, which is maybe he's going to give some indication on Rubin and the expectations because that's the next iteration of their AI chip. So a lot going right for Nvidia so far this year, up over 180%. Up over 1%, nearly 2% today. And we saw some.
Recently, one of the most searched for stocks on the internet has been Nvidia. Therefore, you may want to examine some of the information that may influence the stock's performance in the near future. Compared to the 0.4% move in the S&P 500 composite over the past month, the shares of this manufacturer of gaming and AI graphics chips have returned 0.9%. Nvidia is a part of the semiconductor general industry, which has increased by 0.5% over this time. The crucial query at this point is, where might the stock go in the near future? However, news reports or speculation of a significant shift in a company's business prospects typically cause its stock to trend and result in an instantaneous price change. The buy and hold decision-making process is ultimately dominated by a few basic facts. In this case, evaluating the shift in a company's profits outlook takes precedence over all other considerations. This is due to our belief that the fair value of its shares is determined by the present value of its future earnings stream. In essence, our analysis is predicated on how sell-side analysts who follow the stock are updating their earnings projections to reflect the most recent developments in the industry. The fair value of a company's shares increases in tandem with an increase in profit projections. Additionally, investors are more likely to purchase a stock when its fair value exceeds its current market price, which causes the stock's price to rise. As a result, empirical research shows a substantial relationship between short-term stock price changes and trends in earnings estimate revisions. Nvidia is predicted to report earnings of $0.84 per share for the current quarter, which would represent a change of plus 61.5% from the same period last year. Over the past 30 days, the consensus estimate has changed by plus 0.6%. The current fiscal year's consensus earnings forecast of $2.94 is a plus 126.2% year-over-year change. Over the past 30 days, this estimate has moved by plus 0.4%. Compared to what Nvidia is anticipated to report a year ago, the consensus earnings estimate of $4.16 for the upcoming fiscal year is a shift of plus 41.5%. The estimate changed by plus 0.6% in the last month. Our unique stock grading methodology has an exceptional externally verified track record and successfully leverages the power of earnings estimate revisions to provide a more definitive signal of a firm's near-term price performance. Nvidia has been ranked number 2 by due to the magnitude of the most recent shift in the consensus estimate, as well as 3 additional earnings-related considerations. Even if earnings growth is perhaps the best measure of a firm's financial health, if a company can't increase its revenues, nothing happens. After all, without expanding revenues, it is almost hard for a business to sustain a long-term increase in earnings. Therefore, understanding a company's potential for revenue development is crucial. The current quarter's consensus sales forecast of $37.72 billion for Nvidia is a plus 70.7% year-over-year change. Estimates of $129.02 billion and $191.84 billion for the current and upcoming fiscal years show changes of plus 111.8% and plus 48.7%, respectively. In the most recent quarter, Nvidia posted revenues of $35.08 billion, which is a plus 93.6% year-over-year improvement. EPS of $0.81 for the same time period is higher than $0.40 for the same period last year. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Some bullish call activity in here and out in the January monthly cycle that expires on the 17th. So about 18 days to expiration. A lot of activity early on in the session on the 140 strike calls in here. Over 40,000 were scooped up early on. They paid an average debit of about $4.30 on these calls. So that break even of 144.30 over the next 2.5 weeks or so. That's about 3% above the current share price in Nvidia. So you don't need a big, massive move to the upside. That catalyst could be the keynote address on the 6th of January. Over 65,000 calls have now traded on that strike today. Open interest on that strike at the 140 line has been massive. It was over 280,000 today, so that's going to continue to grow. But you saw a lot of call buying, not only in the January monthly options that expire in 18 days, but in the near-term options on the 140 strike, the February 140 strikes. So big, massive volume on this big round number of 140. The stock's still off about 9% from its all-time highs, but not in correction territory anymore with the gains.
The reported revenues are a surprise of plus 5.27% when compared to the consensus estimate of $33.33 billion. Plus 8% was the EPS surprise. In the last 4 quarters, the company has exceeded consensus EPS projections. During this time, the company consistently exceeded consensus revenue projections. No investment choice can be effective if the valuation of a stock is not taken into account. Determining whether a stock's current price accurately reflects the underlying business's intrinsic value and the company's growth prospects is essential when forecasting the stock's future price performance. It is possible to determine if a company's stock is reasonably priced overvalued or undervalued by comparing the current value of its valuation multiples, similar to its own historical values, including price to earnings, P/E, price to sales, P/S, and price to cash flow, P/TF. On the other hand, evaluating the company's stock price in relation to its peers on these metrics provides a solid idea of how fair it is. The value style score is a useful tool for determining whether a stock is overpriced, appropriately valued, or momentarily undervalued. It grades stocks from A to F by closely examining both conventional and unconventional valuation metrics. An A is better than a B is better than a C, and so on. On this front, Nvidia receives a failing score, meaning that its price is higher than that of its competitors. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Some of the macro themes that you and Citigroup are telling your clients about for next year?
So a couple things. First off, on the growth side, we think the AI story is real. I appreciate what Bob's covering here, but honestly, AI productivity gains, high-level fundamentals look really good for the S&P 500. I think that helps us get through some of the more volatile periods. But at the same time, inflation, not quite gone yet. And then when you think of the valuation setup, a lot of good news is priced in.
Okay, so there's actually a lot to unpack there. Some of the good news priced in, but you're optimistic about some of the AI themes. Now, the market obviously, Drew, very optimistic about AI for the last, year plus. What will continue or what might change in 25?
So it's funny. I think the fundamental stories, at least for the picks and shovels names, they continue. But where we think the trade is actually going to broaden out, and honestly it has since mid-year, is into some of the users of AI. So think about car companies that do autonomous driving, software companies putting that into their programs themselves, and even to some of the more cyclical names that on the back end can get some more productivity gains. So yes, the picks and shovels, the enablers of the trade were attractive for the most part in 2024. We think AI continues to broaden out into the year.
After navigating a maze of regulatory scrutiny, Nvidia just completed its $700 million acquisition of Israeli AI startup Runai, demonstrating yet another power move. The agreement, approved by the European Commission earlier this month, strengthens Nvidia's monopoly on the AI graphics processing unit, GPU market, in which it already holds an overwhelming 80% market share. The EU did not find any red flags related to competition, but the U.S. Department of Justice is still keeping a close watch. Nvidia continues to seize the greatest technology to support the rapidly advancing AI revolution, and this is just another victory. Why is Run such a huge deal? The startup's software, which is presently tailored for NVIDIA systems, assists AI engineers in getting the most performance out of their technology. The twist, though, is this. Because Run AI intends to become open source, its tools may be compatible with NVIDIA's rivals, as well as the rest of the AI ecosystem. Although it's a risky move, it might establish NVIDIA as the essential foundation of AI systems, regardless of whose processors are used. According to Runai, which is doubling down on its goal of dominating the AI optimization area, open sourcing the software will allow it to expand its availability to the whole AI ecosystem, even if it currently only supports NVIDIA GPUs. This is more than just another box checked for NVIDIA. Its overarching AI strategy is a step ahead. Following record-breaking sales of AI chips, the company is making acquisitions that will continue to influence the direction of AI computing. NVIDIA's portfolio in Israel now includes Runai, in addition to the $7 billion Mellanox transaction from 2020. Established in 2018, Runai has been a reliable NVIDIA partner for many years and is now a member of the team. Attention, investors! NVIDIA is creating the surfboard, the ocean, and the entire ecosystem, not simply riding the AI wave.